Welcome to Dr. Fred Markets. This is not financial advice. Most people will never understand how crypto, AI, and global finance are reshaping the world. The rules are changing, and the ones who adapt early come out ahead. You're here. You're paying attention. That already makes a difference. Let's go.
Your S&P is now a leveraged bet on crypto volatility. Here's the verdict. In 2026, your safe U.S. stock portfolio is already running a secret Bitcoin strategy, and you never signed the paperwork. Signal 1, look at the tape. Bitcoin today, 76,609 is down 1.9%. Ethereum, 2,117 down 0.68%. Nvidia, 207 down 1.01%. S&P 500 green, up 0.6%. On paper, that says decorrelated. But zoom out a year and you see the real thing. Every S&P melt-up has arrived right after violent crypto liquidations and forced rotation into safe mega-cap stocks. Your index fund isn't hedging against crypto, it's feeding on crypto traders getting liquidated. Signal 2, SoftBank rips on OpenAI IPO news, and nobody notices the obvious. This isn't an AI story, this is a liquidity story. SoftBank flips future AI hype into today's cash. That cash hunts beta. Where's the fastest beta with institutional-size liquidity? US large caps and BTC. So every time there's an AI IPO headline, you're not just getting a tech pop, you're getting a new pipeline that funnels global speculation between two pipes, US stocks and crypto. Your S&P is the clean on-ramp, Bitcoin is the dirty off-ramp. Signal 3, retail investors just got direct access to a SpaceX IPO through major brokerage platforms. That move is not about democratizing space. It's about creating a new casino table in the same room. SpaceX isn't a quirky private play anymore. It's about to live on the same brokerage screens as SPY and BTC spot ETFs. Now you have one interface, 3 doors. Door 1, US index exposure. Door 2, crypto exposure. Door 3, SpaceX-style private mega growth. And retail rotates between them like they're flavors of the same milkshake. Here's the cliffhanger. When those 3 doors sit on the same app, with the same collateral, and the same impatient gamblers, what happens the next time volatility spikes in any one of them? This is the part nobody tells you. You are no longer diversified across crypto and US stocks. You are diversified across liquidity moods. When crypto pukes, the margin calls hit and forced sellers scramble. Some have to raise dollars. Where's the deepest pool? S&P futures and mega-cap tech. When stocks wobble, the get-me growth crowd sprints back to Bitcoin overnight because you can't trade SpaceX after hours, but you can slam BTC at 3 a.m. And once SpaceX is on the menu for retail, that adds a third reservoir for the same speculative dollar. Same wallet, same margin, different costume. Mechanism. Brokers and ETFs quietly turned your life savings into a 3-way carry trade.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
You fund the account in dollars, you buy an index ETF, or you buy BTC, or one day you buy SpaceX. Behind the curtain, market makers and prime brokers hedge and arbitrage across all 3 because their risk is portfolio level, not ticker level. So your boring S&P exposure ends up correlated not just to US GDP, but to whether degens are getting blown out on Bitcoin or overbidding a rocket stock. Here's the one thing you didn't know. In modern markets, correlation is created by collateral, not stories. The collateral is the same. Your brokerage account, your margin, the same pool of T-bills and cash. Once the collateral is shared, everything that talks to that collateral starts to move together during stress. US equities, BTC, and now pre-IPO darlings like SpaceX. That's why crashes suddenly rhyme across assets that look unrelated on CNBC slides. So what does this mean for you, the allegedly diversified genius with SPY in one account and Bitcoin in another? First, accept the ugly truth. Your risk is not stocks plus crypto. Your real risk is one collateral stack, 3 correlated casinos. Second, flipping between SPY and BTC isn't hedging. It's just changing your seat at the same table. Third, the only lever you control is how much collateral you expose to the table at all. This is not financial advice, but here is the truth. 1. Treat US stocks and crypto as a single risk system when sizing. Stop pretending a 60-40 equities Bitcoin split is diversification. For sizing, think, what total percentage of my net worth is plugged into this broker crypto rocket complex? Not what percent is crypto versus stocks. 2. Watch liquidity metrics, not just prices. When you see headlines like SoftBank surges on OpenAI IPO or retail gets access to SpaceX IPO, translate that to new fuel is entering the same speculative engine. Rising margin debt, junk spreads tightening, and ETF inflows into both BTC and SPY at the same time? That's not comfort, that's concentration of risk. 3. Build one boring, off-casino bucket. If every dollar you own sits in a broker app that also sells you SpaceX, SPY, and Bitcoin, you're not diversified, you're hostage. Cash, short treasuries outside margin accounts, and assets that don't talk to that collateral stack give you the only real hedge, the ability to not play when volatility spikes across the whole complex. You want the upside of crypto and US stocks? Fine, just stop lying to yourself about what game you're actually playing. Your S&P is already a crypto-adjacent trade. Your crypto is already a US liquidity trade. Your broker turned them into one organism. Time to treat them like one. This is not financial advice, but it is the part your brokerage UX team will never explain. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.